The Reserve Bank says the outlook for growth is marked with uncertainty. The central bank says infrastructure constraints will continue to negatively impact growth going forward. The local economy is expected to grow at 0.2% this year and to improve slightly to 1% next year. It's expected that the negative impact of load shedding will be partially offset as more businesses invest in backup energy solutions. Eskom's maintenance program, improving energy availability factor, is also expected to help. The Reserve Bank, however, says this benefit will likely materialize over the next 2 years.
Because of the challenges that we are seeing in the domestic economy, GDP growth has been downgraded markedly and also has been as the potential growth, GDP growth. And to try to understand why this has been happening, well, the biggest reason why there has been this downgrading of growth and actual growth and potential growth is largely due to electricity constraints that we are facing as a country. And here we see on the left-hand side chart that if you look at the red section there, where we are showing total unplanned outages, this has been increasing sharply over the past year. And of course, if you look at the energy availability factor, we see that it has actually come down quite a lot, which means a lot of our generating plants are offline most of the time, and therefore we cannot provide adequate electricity to support economic activity.
The Reserve Bank expects inflation to slow going forward and returning to within the central bank's target range of 3 to 6% by the third quarter of this year. Inflation is expected to average 6% this year and only edge lower to the midpoint of the target range only by 2025. Risks are, however, tilted to the upside.
We remain committed to bringing inflation back to target. For inflation declining back to target means better anchoring of inflation expectations, and lower inflation begets lower interest rates, and thus the cost of finance in the broader economy.
Despite the rising cost of living pressures, household spending is expected to contribute positively to growth over the medium term. Inflation expected to moderate, returning to the target band later in the year, improving consumers' real disposable incomes. Economist Elise Kruger says with the elevated inflation, households are in for some tough times ahead.
The fact that inflation remains at elevated levels definitely indicate that consumers are in for a longer period of hard times. Now, I think the Reserve Bank is not comfortable with the current level of inflation, and also looking forward, there are many upside risks to inflation, so there's a potential for even further interest rate hikes. So I think consumers should know that they are in for a little bit longer of strain on household finances.
The Reserve Bank says while it's still early days, interaction with local banks shows no signs of negative impact of the grey listing of South Africa on business. It says local businesses have also not had difficulty getting funding from foreign markets as a result of the grey listing. Gloria Sefako Mosi, SABC News, Johannesburg.